there will be no anonymity. There will be no privacy when push comes to shove. And we all remember what happened to the people who donated money to the truckers in Canada, and that could happen very easily in this system too. Maneko 64, home of alternative economics and contrarian views. Today, we're going to look at how the digital pound could potentially be a digital prison, really. We're going to look at how the Bank of England and the Treasury are using the private sector to push for no privacy whatsoever. So we've seen the Bank of England, of course, and the Treasury come out with a few documents this month so far. One of them is called the digital pound, a new form of money for households and businesses, ? And it's a consultation paper. It's 116 pages. I'm going to put the link to it below in the description. I've gone through a big part of this consultation paper. I didn't go through the whole thing, but I went through the parts that I think are really important. A lot of it is very technical, but for me, the most important parts are basically the idea behind it and what it will mean to you and also to businesses. The other one is the digital pound technology working paper, and that's about 86 pages. I didn't go through that in too much detail because the first one is the one that is important in my view. And I've taken notes, so I'm going to go over some of the parts of this consultation paper that I think are very important. So as you can see here, some important points taken from the BOE consultation paper. And I'm going to put a link to the other technology one as well below in the description. And this is what it says at one point here. At this stage, we judge that it is likely that the digital pound will be needed in the future and that it would offer benefits. As set out in more detail in Part B, the digital pound would maintain public access to retail central bank money, thereby anchoring trust in the monetary system in a more digitalized world and underpinning monetary and financial stability. Also, as our lifestyles and the economy become ever more digital, it would, through partnership with the private sector, there you go, that public-private partnership, which we know what that means when the government and the private sector get together like that. That's what happened in the 30s in countries like Italy and Germany, and it starts with an F, right? Promote innovation, choice and efficiency in domestic payments, thereby boosting the UK economy, supporting and financial inclusion, supporting growth, excuse me. So here, as you can see, I wrote, the BOE seems to think it will be able to anchor trust. So the way they explain it, the Bank of England, and actually it's a good explanation of how our currency system works, because they use the term money a lot, and I would say we don't have money in our system, at least not real money, not marketable, the most marketable commodity. What we have in our system is a currency. It's a fiat currency forced upon us. And how do they do that? Well, they force us to pay our taxes in that fiat currency. So this is what they say here. This is another part of that consultation that I thought was important to let you know about. It says, we are exploring a digital pound because money and payments are changing. Individuals and businesses in the UK use two main forms of money for day-to-day spending, And this is where it's quite interesting. Private money, yes, private money or currency, as I would see it, issued by commercial banks, and public money issued by the Bank of England. Private money is typically a claim on a private commercial bank in the form of bank deposits held by households or businesses. So, yeah, your supposed money in the bank, it's actually not yours. It's an unsecured loan. That is private money, according to the Bank of England. I would say it's more like private currency. So how is that currency created? Well, if you go to your bank and you say you need a loan for £5,000 because you want to do some home improvements, or you want to, or whatever, they will credit your account for £5,000. That's what they mean by this private money. And it says this private money is undermined by the regulation and supervision of commercial banks, I guess by the Bank of England. Now they come to public money. I would say again it's public currency, but let's continue. Or central bank money, by contrast, is issued by the Bank of England. It is currently available to the public only in the form of physical cash. So that's just the paper money or paper currency. The coins are actually minted by the Royal Mint. It's minted by the Treasury. Central bank money is financially risk-free in the sense that there is no credit risk or market or liquidity risk. So basically, this is what they mean by central bank money. £20 note, you hold it. It's not like on deposit in a bank. And in the bank, of course, it's just an entry, a digital entry these days, because a lot of banking is done online. So basically what the Bank of England is saying, and I think what they're concerned about, is that cash is becoming almost non-existent in terms of its usage, that the Bank of England pretty soon won't need to issue any more paper money or Bank of England money or central bank money. And they show this chart here. As I took this chart, put it into the notes. Look at how back in 2012, most of the transactions were done with cash. And now cash is like really dropped, and cards and others have gone up considerably. So you've got cards and other are about 85% of all transactions, and cash is only 15%. So let's see what else they say here. The Bank of England. The digital pound would provide a public platform for private sector innovation. It sounds all very good, but you'll see what I mean when I think it's a nefarious and very deceptive way that they're putting this through. The digital pound system would be a public-private partnership. So all this stakeholder thing, like the World Economic Forum talks about. The private sector would play a crucial role in offering innovative and user-friendly services. The bank would issue the digital pound. By the bank, they mean the Bank of England. This means it would be a direct claim on the bank, as cash is today. It would be denominated in sterling, the currency of the UK, and £10 of digital pounds would always have the same value as and be interchangeable with a £10 banknote. The bank would provide the digital pound and the central infrastructure, including the core ledger. And here's the important part, in my opinion. It says private sector companies, which could be banks or approved non-bank firms, would be able to integrate into the central digital pound infrastructure and provide the interface between the Bank of England and users. So what that means is that the Bank of England will not be connected to you. It will be you'll be connected to private companies that provide a wallet. Yeah, the wallets would be integrated into their other services. They're known as pass-through wallets, hereafter referred to as simply wallets, because the user's holdings of digital pounds are recorded anonymously on the bank's core ledger in order to safeguard their privacy. Sounds really good, doesn't it? It's saying, well, the Bank of England won't know who you are. It will be anonymous. It will safeguard your privacy. But stay with me. And the wallet simply passes instructions from the user to the core ledger. End users would interact with these wallets rather than directly with the bank. Sounds good so far, right? So here's a kind of some of the points they've made here about the digital pound. We can go through them quickly, and I will continue after that, of course. It says our model for the digital pound. So public-private partnership, used by households and businesses, public digital money issued by a central bank platform operated by the Bank of England, seamlessly exchangeable with other forms of money, including cash and bank deposits. So actually, I think this is going to run parallel. The central bank digital currency, or cash, central bank digital cash, will run also with what's called the private currency or private money. That's not going to go away unless all the banks collapse and then the Bank of England takes over everything. But they don't talk about that, of course. Wallets to hold digital pounds offered by the private sector. So here's the private sector. They are going to be in control of the wallets. Accessed by users through smartphones or cards. This is the part that is, you really need to look at this to realize that it's not what it seems. Privacy protected, like for cards and bank accounts, but not anonymous. Okay? No interest paid. The Bank of England and the government would not see any personal data. Sounds really good, right? You remember when PayPal froze a lot of accounts during the Canadian truckers' strike and other payment platforms? Well, the Canadian government didn't have access to your details, but PayPal did the dirty job, and I think that's what's going to happen. These private wallet providers are going to do the dirty job for the government and the Bank of England. It does say that it will be limited amount per user, at least initially. Some people think, yeah, that's outrageous. I think Cunliffe said it was going to be a total of 20,000 to begin with. But as I said, I think this is going to run together with the private bank money, like the deposits that you already have. This is supposed to be outside the commercial banking sector. It's supposed to be like using cash from the Bank of England, but digitally. So let's continue. Accessible to UK and non-UK residents, and good for everyday payments online and in store. And it says a digital pound would provide a public platform for private sector innovation. The digital pound system would be a public-private partnership. Again, there you go. The private sector would play a crucial role in offering innovative and user-friendly services. This is an interesting point they make here. Like current digital payments. So when you use any digital payment provider, your bank card, or these digital banks, online banks, it says, like current digital payments, the digital pound would not be anonymous because the ability to identify and verify users is needed to prevent financial crime. So there you go. that's where they're really sneaky. They're saying that the government and the bank will have no access to who you are. You'll be anonymous to the government and the bank. But they've put the onus of that non-anonymity, they put your privacy in peril through the private wallet provider. That's what they've done. And I think that's like the biggest thing that I've learned about this digital pound, at least here in the UK. That's what it looks like they're going to do. Here's just a timeline of, because when you go through the consultation paper, they seem to say, wow, this is not certain if we do go ahead with the digital pound. They make it seem like, it's all going to be above board. There's going to be consultations. You can write to them. But yeah, they expect if everything goes to according to their plan, that this digital pound could be up and running, start running really, and then really pick up after 2025. So that's the timeline here. And as you can see here, they're kind of like sitting on the fence. Not really. They're saying a decision whether or not to proceed to build phase to a build phase would be made at the end of the design phase around the middle of the decade. This work will shorten the lead time for the introduction of a digital pound, which would be in the second half of the decade. Let's continue here. This is to do with this public-private partnership and how they're going to use actually the private sector, the private companies. They're going to do the dirty job of keeping a tab on you, not the government. That's how they're going to get around it. It says innovative cryptography can also be used in novel digital identity solutions. Those can enable users to provide their identity or an attribute of their identity. For example, that they are over 18 without having to share all the personal identity data in an ID document. The role of digital identity in the future digital economy would serve to generate further efficiencies and improve KYC, know your client, and AML processes, anti-money laundering. So there you go. So you will have no more, privacy like you have with cash. Cash is anonymous. It doesn't have your name on it when you pay it. The person or the business that accepts payment doesn't ask you who you are. But with this digital currency and the wallet, digital wallet, it's going to be very different. I've got my wallet here. I paid quite a bit for this wallet. I like this wallet, but it's a nice wallet. It's protected because of the cards. People can steal your info, clone your cards, so it has a protection. But a digital wallet will be nothing like a normal wallet where you put your cash in, because once you buy this wallet, you don't have to keep paying for the company that made the wallet. And the company that made the wallet is not going to report what you're doing with your cash and who you are. So to call this a wallet is really disingenuous, I would say. And here we come to the part, because the Bank of England seems to think that we need the digital pound because everyone, the world is moving away from cash already. So we need to have some public digital money, because they think that the Bank of England is the best thing since sliced bread. They think it's very stable and provides an anchor. And we're going to go into that part now. So here they talk about the forms of money that we use now. And this is very interesting. And I put a note here, a question: promise to pay in what? as John Exter said, after 1971, the dollar and all currencies are IOU nothings. But it says here, forms of money in use now and in prospect to serve its important role in society. Money must satisfy three criteria. It must be a store of value. Well, the pound, the fiat pound since 1914 or 1926, 1931, since we left the gold standard a second time, it's been a horrible store of value. So that's a fail, but the Bank of England seems to think they've been successful. It's a medium of exchange and a unit of account. Well, I would agree that that's worked. Most money today is a kind of IOU or promise to pay. And my question is, promise to pay in what, the Bank of England? Because you still keep that promise on your banknotes. I promise to pay the bearer on demand the sum of £10. And I've called up here, and I've called the Bank of England a few times and asked them, what's the promise for? And they said, oh no, it just means that you can bring an old note and get a new note, replace them. And I said, well, why don't you write that? You can replace an old note with a new note. Basically because this is a vestige from when this is a real promissory note, and you could tender this and get 10 gold sovereigns, always 10 gold sovereigns. Of course, now it's not really a promise to pay in anything. So that's another misleading statement there by the Bank of England. That is special in that it is widely trusted and therefore performs important social and economic functions. It serves as a store of value with which to transfer purchasing power from today to the future. Well, it hasn't done, where are we now? I think we're in the last 2 or 3% of what the pound was 115 years ago. So that's a fail as well. Medium of exchange with which to make payments for goods and services. Yeah, that's still working. And the unit of account, which measures the value of all other goods, services, and financial assets. Well, that one there could get very dodgy or very fragile, that quality that the fiat pound has, with increasing inflation and volatility in prices. And I said here, looks like stable coins will be anything but, because they mentioned stable coins as well. They think there's a place for the stable coins, that it could be like the private commercial bank money. And this is what they say. The second expectation states that stable coins used as a money-like instrument should have standards equivalent to those that apply for commercial bank money in relation to stability of value, robustness of legal claim, and the ability to redeem at par in fiat. That's another disingenuous point of view, I think, idea about stable coins. They're saying, wow, it will be as stable as the fiat currency that we have now that is issued by commercial banks. But I spoke about the other day that commercial banks in the UK, they only keep 2% in reserves. So how stable is that? In the US, of course, right now, the reserve ratio is at 0. So I wrote here, pot calling the kettle black. This is in relation to what they say here. They're saying that unbacked crypto assets are not money, as they are high risk and speculative assets. At the same time, though, they say that the current fiat currency, they're backed and they're not risky. It's such a load of rubbish. I'm not going to go through this. You can go through it. I'm going to put the link below, or you could stop the video here. Of course, in both these consultation and technology working paper, There's no mention about gold and silver or how to make the system more stable, of course. And I wrote here, gold and silver are the best anchors for a currency and not the central bank issued fiat or digital pound. The likely need for a digital pound. So why do they think they're going to need it? It says our primary motivations for the digital pound. Ensuring the role of UK central bank money as an anchor for confidence and safety in our monetary system. So what they're saying is that they feel that more and more people, especially young people, they won't want to use this. And so their excuse is that they want to provide some stability and have the equivalent of this in digital form, with the liability being with the central bank and not the commercial banks. But they could stop that. They could reverse that. And for example, pass rules that say that businesses have to do half their businesses payments in cash and keep cash going if they thought that would be a problem. So I think it's just an excuse to really end privacy once and for all and be in control of our lives. So it says here, and safety, sustaining access to financially risk-free central bank money as the anchor of monetary and financial stability. That's why I made that comment about gold and silver, because if they really wanted to promote the monetary and financial stability, they would bring back sound money and anchor the system with gold and silver. Let's continue. I mean, this could have been a lot longer, this video. I've taken the main points that I think are important. It says here, this is from the Bank of England, the digital pound would have at least the same level of privacy as a bank account and would also allow users to make choices about data use. Responses to the bank's 2020 discussion paper emphasized the importance that users place on having privacy in their transactions. Security and privacy were often cited as aspects on which there should be little or no room for compromise. The bank and government agree, and this perspective informs our proposals for the digital pound's design. We therefore propose that the digital pound is at least as private as current forms of digital money. So it's not really going to be private, because when push comes to shove, as we've seen during the pandemic with the protests in Canada and other places, they can freeze private companies working with the central bank and the government. They can freeze your account or your wallet in this case. Like the money in a commercial bank account or e-money, digital pound users will be able to make choices about the way their data is used. We are supportive and encourage firms to offer services that enable holders to opt for enhanced privacy functionality and exert greater user control of personal data. The digital pound will be set up in a way that enables this. I don't buy it, because we've seen what PayPal and others have done to people, and they could change. These private companies could change things and make it impossible for you to use the wallet unless you give out a lot of information, and that's happened with the crypto. Because I remember when I started looking into crypto and using crypto over 10 years ago, all the exchanges were like the Wild West. You didn't have to provide KYC or AML, and now you do, and you can bet that these digital wallets are going to be the same. So here are the privacy objectives for the digital pound, and I think this is where we'll end. So this is really important because this is what it's all about. So it says, neither the government nor the bank would have access to digital pound users' personal data. Sounds really good. A digital pound would not be anonymous because the ability to identify and verify users is needed to prevent financial crime. Well, am I against preventing financial crime? No, but it's not for financial companies or electronic payment companies to do that. It's for law and order to do that. And yeah, it's not for us to be policing everyone. And I would say financial crime is perpetrated by a minority of people, the criminals, small percentage. So why should we all be liable to this? And this is just an excuse to take control of everything you do. Users should be able to choose from a range of wallet services. Varying levels of identification would be accepted. Users should be able to vary their privacy preferences to suit their needs. Enhanced privacy functionality could result in digital pound users securing greater benefits from sharing their personal data. So I'm going to stop right here. And I would say this first column here about the government and the bank not having access to your personal data is complete rubbish. It's just like a deflecting, trying to fool you. Look here instead of here, because it's going to be a public-private partnership. And when that happens, yes, we are all really in danger, I would say. And we've seen that since COVID. Government hasn't even had to, a lot of times, mandate things because the private corporations have done the job for them. And you can bet they're going to be consulting every year at Bilderberg or at Davos. And they're gonna, the central banks, these big corporations that are gonna be involved with the digital wallets, they're gonna be working together. So that's my conclusion. Yes, it's not what it seems. The Bank of England has put it out as a wolf in sheep's clothing. I would say, yes, you can write to them and give your opinion and what you think, but never mention gold or silver as a way to stabilize the monetary system, right? They think the Bank of England has credibility, that they have credibility, and they don't. And this digital wallet will be nothing like a real wallet, because when you buy a real wallet, it's yours. And you keep your cash in there. No one knows what's in there unless someone steals it. But you don't have to keep calling the people who make your wallet to tell them where you're spending your money. So I think it's a really bad idea. My hope is that it doesn't really evolve. They're trying to push this relatively slowly, I would say. Over the next 3 years, and they're hoping to have it all set up by the end of the decade, but hopefully they will fail. So if you have any questions, make sure you ask them in the comment section. I'll try to go over them. And I'm also hoping to have Clive Thompson back, because he's looked into the consultation paper and the technology paper as well. But he's away right now, and hopefully when he comes back, we can talk about it, because he's probably got some different ideas than I do as well. So with that, I'm going to wish you all a great rest of the weekend. Yes, Rudy is here. He's fast asleep. This is Saturday night, so I thought I'd make this video tonight, because I think it's really important that we look at the digital pound, and that it's not really what it seems to be. There will be no anonymity. There will be no privacy when push comes to shove. So there you go. I'll talk to you later. Take care. Bye.